Hello friends, very soothing greetings of this divine evening to all of you. I hope you all are doing really well in your respective lives. So, I Kunal Nagpal would like to welcome you all to this Great Economic Forum Nagpal Economic Academy. Dear friends, in these evening hours, I would like to bring forth the core developments taking place in our economy. And simultaneously, we are also going to discuss the major international economic scenarios taking place across the globe. So, my dear friends, as all of us are quite aware that the biggest Aero India show has actually kicked off on 13th February 2023. The biggest edition of Aero India, billed as Asia's largest aerospace show, kicked off on Monday with a major focus on actually generating employment and showcasing India's growing ambitions as an arms exporting nation. The show was inaugurated by the Prime Minister Shri Narendra Modi ji, and it will include the Defense Ministers Conclave that will basically be attended by 32 foreign ministers. A unique aspect of this year's show is basically a focus on generating employment, with several companies earmarking time to meet the prospective candidates for high technology jobs in aerospace. And some companies, including Airbus and Thales, have invited the prospective candidates to actually meet the senior officials at the show and plan to generate at least a shortlist at the end of the expo. The Defense Ministry officials said that the Memorandum of Understanding, that is MOUs worth 75,000 crore rupees, are actually expected to be inked during the show, which will basically include the investments by the defense companies, formations of joint ventures, and technology transfer pacts. The show is basically being organized in an area of over 35,000 square meters and will see the participation of nearly 98 friendly foreign nations. More than 800 defense companies will actually showcase their equipment, with the senior officials from several nations expected to participate. A key event during the show will actually be a conclave to be attended by the defense ministers of 32 countries. So based on the theme of shared prosperity through enhanced engagements in defense, it will basically focus on deepening the capacity building and will pitch Indian weapons to the world. So, going further, let's try to explore the 10 quick facts about this particular summit, that is Aero India 2023, which kicked off in Bengaluru on 13th February. My dear friends, the 14th edition of Asia's largest aero show, Aero India 2023, kicks off in Bengaluru on Monday, that is on 13th Feb. The 5-day event will basically focus on displaying the indigenous equipment or technologies and hence forging the partnerships with foreign companies. According to the Prime Minister's office, the theme of Aero India 2023 is the runway to $1 billion opportunities. The Prime Minister's emphasis on Atmanirbharta in the Indian defense sector will also be displayed, as the event will basically showcase the country's progress in design leadership, growth in the UAVs sector, defense space, and futuristic technologies. Further, the event will basically promote the export of indigenous air platforms like light combat aircraft, Tejas, HTT-40, Dornier light utility helicopter, light combat helicopter, and advanced light helicopter, the PMO said in a statement. The event will also help in actually integrating the domestic MSMEs and startups in the global supply chain and therefore attract the foreign investments, including the partnerships for co-development and co-production. So the 10 quick facts about this great event are as follows. Firstly, spanning over 5 days, the event on the theme, the runway to $1 billion opportunities, will basically radiate the rise of a strong and self-reliant new India by actually displaying India's growth in aerospace and defense capabilities. Secondly, the focus will be on showcasing indigenous equipment or technologies and hence forging the partnerships with foreign companies in line with Make in India, Make for the World vision for a secure and prosperous future. Thirdly, around 250 business-to-business agreements are actually expected to be firmed up at the Aero India, which is estimated to unlock investment to the tune of around 75,000 crore rupees. Fourthly, organized at Air Force Station Yelahanka in a total area of around 35,000 square meters, the event, the biggest ever to date, is likely to witness the participation of nearly 98 countries. Furthermore, the defense ministers of 32 countries, air chiefs of 29 countries, and 73 CEOs of the global and Indian OEMs are actually expected to attend the event. 809 defense companies, including the MSMEs and startups, will basically showcase the advancements in niche technologies and the growth in the aerospace and defense sectors. The major exhibitors include Airbus, Boeing, Dassault Aviation, Lockheed Martin, Israel Aerospace Industry, BrahMos Aerospace, Army Aviation, HC Robotics, SAAB, Safran, Rolls-Royce, Larsen & Toubro, Bharat Forge Limited, Hindustan Aeronautics Limited, Bharat Electronics Limited, Bharat Dynamics Limited, and BEML Limited. The event basically aims to promote the export of indigenous air platforms like light combat aircraft, Tejas, HTT-40, Dornier light utility helicopter, light combat helicopter, and advanced light helicopter. Furthermore, a full-scale LCA Tejas aircraft in the full operational capability configuration will be at the center stage of the India Pavilion. LCA Tejas, that is the light combat aircraft Tejas, is a single-engine lightweight, heavy, agile, multi-role supersonic fighter. It is designed for air combat and offensive air support with the reconnaissance and anti-ship as its secondary roles. Furthermore, some companies including Airbus and Thales have actually invited the prospective candidates to meet the senior officials at the show and hence plan to generate at least a shortlist at the end of the expo. Also, there will be a section for the defense space, new technologies, and a UAV section which will basically give an insight into the growth of India in each sector. The sky of Bengaluru is actually becoming a witness to the capability of New India. Bengaluru's sky is basically going a testimony that the new height is the truth of New India. I repeat, the new height is the truth of New India. Today, the nation is actually touching the new heights and even crossing it. Respected Prime Minister Shri Narendra Modi ji said at the event. Now, after this great insightful analysis, we are going to move forward in our discussion, wherein we will basically see that the Tata Group is actually set to record the highest growth in history. And this is really a milestone being set in the Indian economy. My dear friends, Tata Group is all set to record the highest growth in its history, with both unlisted and listed entities growing upwards of 20%. Importantly, both traditional and the new businesses have actually lined up large capex plans. The traditional businesses will basically fund their own growth through the internal accruals. The Tata Group companies are basically recording robust growth across the board, and its overall annual growth is basically expected to be roughly 20% in the year 2022-23, which is very significant for a group of our size. So while our portfolio of the businesses have their own cycles, the group's combined profit and cash flows are actually very strong. We are also happy that the group has basically achieved its stated goals. Each of the traditional businesses will fund its own growth through the internal accruals. Tata Sons chairman Mr. N. Chandrasekharan said in an exclusive interview at Tata Group headquarters, Bombay House. So, my dear friends, Tata Power and Tata Steel are actually investing upwards of $10 billion, that is 82,500 crore rupees each, while Tata Motors and Jaguar Land Rover will together invest $25 billion, that is 2.06 lakh crore rupees over a period of 5 years. There will actually be substantial investments in Air India, which will basically house the group's combined airlines. So in all, the Tata Group has actually lined up an investment of nearly $90 billion, that is 7.42 lakh crore rupees over the next 5 years across its existing and new businesses. So the new businesses basically include electric vehicles, batteries, renewables, 5G, precision electronics, and possibly the semiconductors. The group will also soon take a decision on the future of its loss-making United Kingdom steel unit. Tata Sons is only offering the moral support with additional funds if sought, he said, further adding, I expect the Tata Steel and Tata Motors to basically match Tata Consultancy Services soon, answering the long-standing criticism about the group's dependency on the IT company. TCS, that is the Tata Consultancy Services, has the market cap of 12.94 lakh crore rupees. The combined market cap of Tata Steel, that is 1.32 lakh crore rupees, and Tata Motors, that is 1.6 lakh crore rupees, is actually less than that of the TCS. Whereas the revenues of both the companies are higher than that of the IT company, that is TCS. Revenue of Tata Motors, Tata Steel and TCS basically stand at 3.01 lakh crore rupees, that is $38 billion, 2.45 lakh crore rupees, that is $32 billion, and 1.96 lakh crore rupees, that is $26 billion respectively. He further added, Tata Sons is now firing on all cylinders with regard to the transformation of Air India, which is basically expected to operate as one merged entity combining Air Asia, Vistara, Air India Express and Air India by March 2024. We are actually working on a completely new organizational culture, including the human resources, technology, engineering, customer service, flight operations, ground handling, modernization, and fleet expansion. It has also set up an entity to actually implement the EV battery plants and is basically identifying the sites to start production. We are ready and we will be starting our India plan very soon. It will also address the requirement of Tata Motors. We are also evaluating an international site, but that will basically take some more time, said Mr. N. Chandrasekaran. The group is also making significant investments in its new growth businesses, which basically include Air India, Tata New Super App, batteries, Tata Electronics, and 5G. Tata Sons is currently evaluating the proposed venture into semiconductors. We are still evaluating the semiconductor business plans. Actually, it is a very tough business which has to be very well understood and precisely executed, Tata Sons chairman Mr. N. Chandrasekaran said. Actually, he had taken charge as the first non-Tata chairman in 2017 and his term was renewed for another 5 years in February 2022. Tata Digital has also been working on ensuring the better consumer experience with its super app Tata Neu. He said, soon after the launch, the app got a lot of attention with a high number of downloads. However, the customer experience was not up to mark and there were glitches that basically needed fixing. So in the last 6 months, many of these issues have been addressed. Now, Tata Neu is basically seeing good progress across various parameters. The app ratings have now improved to 4+ in iOS and Android. The monthly visit frequency of the customers and monthly transacting customers, etc., have been consistently rising. The customers are now also increasingly transacting across multiple categories. Furthermore, Mr. N. Chandrasekaran ruled out any blip in consumer demand or stress in the consumer sentiment. All our businesses are actually growing, whether it is consumer, electronics, retail, hotels, power, passenger vehicles, or information technology. So there is actually a clear growth momentum that our companies are noting. So I can only see the growth and don't see any stress or blip in demand. All our businesses, including steel, cars, Westside, Zudio, Titan, Indian Hotels, Chroma, Tata Consumer, have shown immensely good growth, he said. The Tata Group growth plans are actually backed by its synergies focused on the overall strengthening of the core, hence transforming and creating the future businesses, he said. The balance sheets of the group companies were capitalized in the first 5 years of N. Chandrasekharan's tenure by the Tata sons in order to focus on the fitness and performance holistically. The group now has 30 companies across 10 business verticals, that is technology, steel, automotive, consumer and retail, infrastructure, financial services, aerospace and defense, tourism and travel, telecom and media, and trading and investments. Now, my dear friends, let's discuss certain very important aspects regarding the Adani Group debt. The bank's fate actually rests on cash earnings of the companies. My dear friends, an internal assessment by the banks basically shows that the investors in Adani Group bonds could actually see a trading loss after Moody's downgraded the credit outlook of some group companies, but the lenders with secured debt are actually counting on the conglomerate's expected $7 billion annual pre-tax earnings for the timely loan repayments. So the impact of the Moody's Investor Service report is likely to be different on the two groups of debt holders, the bankers said. An immediate market reaction in the sell-off could actually lead to mark-to-market losses on the bond portfolios. For the banks, the projection on the pre-tax earnings actually provides visibility on the payments for at least 18 months. The near-term maturities are actually very few because they have basically spaced out the term maturities, said a banker with a European lender. The cash yielding assets are actually good enough, but even if they face some pressure, they could actually halt some discretionary capex, which would be sufficient to give them room to meet the payments. Moody's on Friday lowered the outlook on the bonds of 8 Adani Group companies, including Adani Transmission and Adani Green, to negative from stable, citing the recent sell-off in their shares. It retained the stable rating on Adani Ports and Special Economic Zone. The group, with an estimated aggregate debt of $30 billion, was stung by a report from the short seller Hindenburg Research, which alleged misgovernance at the group causing the sell-off. The shares have since recovered part of the losses. So more than half the group's debt is actually held by the global banks led by the Deutsche Bank, Standard Chartered and Barclays. So, as bankers, we don't really worry much about the stock prices, said a domestic banker who basically did not want to be identified. All the operating companies generate enough cash to meet the interest payments. But the real issue is basically with the term loans. Even there, it could be repaid even if it is not rolled over in the worst case scenario. The Deutsche Bank, Barclays and Standard Chartered declined to comment on the specific ET queries. Furthermore, after the sell-off in the shares, the State Bank of India has actually taken more shares of Adani Group firms as additional collateral for its $300 million funding for the chemical project. So such a share pledge is only as additional collateral security over and above the project assets, and no finance is actually extended by the State Bank of India against such shares pledged, an SBI spokesperson said. The ports to green power conglomerate has built infrastructure assets over the past decade by leveraging. Hindenburg had raised questions about the valuations of the group's stock prices, which were actually much higher than the peers globally. The group flagship Adani Enterprises had scrapped a share sale following the steep fall in the share prices. While the equity investors have lost money, the lenders, a key component of the group's growth, say the leverage in operating companies is actually manageable with their cash flows. So far, the Adanis have had a good track record of repayment, and the prepayment of $1.1 billion is basically an indication to us that the group chairman's intentions are basically to repay, said a second European bank executive. Even at the holding company level, his leverage or share financing may be just around $750 million, which is actually manageable given the ownership. The bank's internal estimates show that even if the equity value falls another 50%, the Adani family may still be worth $50 billion. Just the stake in Adani Ports, the group's crown jewel, is worth about $9 billion, which could actually be used to deleverage the share-backed funding. The biggest worry for the bankers among all the group companies are actually Adani Transmission and Adani Green, which are actually the most over-leveraged at more than 8 times. Many projects are actually underway and may take a year or so to actually churn out cash. So if the group wants to keep the credit record clean, it has to meet the repayments for these companies. These two particular companies, that is Adani Transmission and Adani Green. So my dear friends, while the short-term payments may not be an issue for the Adani Group, the fresh funding could actually be hard to come by. And that could hurt the group's expansion plans, said the bankers. Some banks have actually trimmed their exposure too. So in the normal course, the banks downsell their exposure to other investors, and that is what has actually happened in this particular instance as well. There may be a little bit of the exposure with the private banking clients, but that particular risk is on their books, said another foreign bank executive. Now, what are the key takeaways? The debt points. The group debt estimate is nearly $30 billion. The group EBITDA is $7 billion year ahead. The term debt for 12 months is nearly $1.6 billion. For 3 years, it's $11.2 billion. And for 5 years, it is $10 billion. Now, as far as the cash generating assets is concerned for Adani Enterprises, they are basically for the ports, transmission, airports, cement, and green power. Furthermore, in terms of share financing, it's nearly $750 million to $800 million. And even if the stocks fall 50% more, the debt can actually be serviced. Furthermore, equity is actually raising in next 12 months, and this is the basic key for the Adani Enterprises. Also, the weak links are green power and transmission, that is Adani Green Power and Adani Transmission, as we have just discussed. Now, after this great in-depth analysis, let's try to understand that how Mr. Gautam Adani cuts growth target, capex in the post-Hindenburg repair moves. My dear friends, Mr. Gautam Adani's conglomerate, Adani Enterprises, has actually halved its revenue growth target and plans to hold off the fresh capital expenditure, according to the people familiar with the matter, as the Indian billionaire actually seeks to rebuild investor confidence in the wake of a bruising short seller attack. Now, the group will basically shoot for the revenue growth of 15% to 20% for at least the next financial year, down from the 40% growth originally targeted, said the people who didn't want to be named as the discussions were private. The capital expenditure plans will also be scaled down, they said, as the group prioritizes bolstering its financial health over the aggressive expansion. Furthermore, the shift shows how the ports to power conglomerate is actually focused on conserving cash, repaying the debt, and retrieving the pledged shares as it scrambles to basically undo the damage from a scathing report by Hindenburg Research on January 24. Even though Adani Group denied the allegations of accounting fraud and stock manipulation levied by the American short seller, the scandal actually triggered a stock rout that has actually wiped more than $120 billion off the Adani empire's market value. This is really very, very important and significant aspect. That is, this particular acquisition by the Hindenburg report for the Adani enterprises has actually led to the wiping off of more than $120 billion of the Adani empire's market value. Furthermore, holding back on investments for even as little as 3 months could actually save the conglomerate as much as $3 billion, funds that can actually be deployed to pay down the debt or boost the cash pile, said another person. The group's plans are still being viewed and reviewed and are set to be finalized in the next few weeks, the people said. So, an Adani Group representative didn't immediately respond to an email seeking the comments on its plan to slash the revenue target and delay the capital expenditure. Now, my dear friends, let's discuss the aspect of interlinkages. The scale and economic interlinkages of the Adani businesses actually make it very relevant to discuss what any pullback in the group's investments could actually entail for the economy, the Indian economy as a whole. Barclays PLC's analysts led by Avanti Save wrote in a February 10 report, a disruptive outcome of the situation or a sharp pullback in the group's investments could actually have implications for India's capex cycle. The Chief Financial Officer, Mr. Jogeshendra Singh, told a local newspaper last month that the Adani Group may actually dial back the capital expenditure as a follow-on share sale by Adani's flagship firm was underway amid Hindenburg's acquisitions. So if the follow-on offer failed to get subscribed, we will actually postpone the growth program for 6 to 9 months and then do it later, Mr. Singh told the Hindu Business Line in an interview published January 29. The sale was scrapped 3 days later amid pressure from the investors. The retreat is actually a marked turnaround for a tycoon, Mr. Gautam Adani, who was being on a rapid and debt-fueled expansion spree over the past few years and reflects the significant impact Hindenburg's assault has had on the conglomerate altogether. My dear friends, the first generation entrepreneur who actually started with an agri trading firm in 1980s rapidly built an empire that now spans ports, airports, coal mines, power plants, and utilities. In the past couple of years, it actually forayed into green energy, cement, media, data centers, and real estate, hence taking on considerable leverage in a way that has actually spooked some credit watchers. Now, what are the real assuage concerns? In the days following the Hindenburg-triggered stock meltdown, Adani and his companies have been working to assuage investor and lender concerns. On 1st February, the flagship Adani Enterprises Limited abruptly shelved the $2.5 billion follow-on share offer despite it being fully subscribed the day before, as the tycoon sought to avert embarrassing mark-to-market losses for his investors amid the unrelenting stock sell-off. A couple of days later, the company cancelled a retail bond sale. So Adani Group has actually been focusing on staving off the concerns about its financial health and shoring up the sentiment. On 6th February, the group said Adani and his family prepaid the loans worth $1.11 billion in order to release the pledged shares across the three firms, while the ports unit announced the plans on 8th February to repay 50 billion rupees debt in the year starting April to actually boost a key credit metric. The conglomerate plans to prepay a $500 million bridge loan due next month after some banks backed at refinancing the debt. Bloomberg News reported Wednesday, citing people familiar with the discussions. It was actually the part of fundraising last year to basically finance the acquisition of Holcim Limited's India Cement assets. Now let's analyze the overall scenario of the Big Four auditor. Adani Group plans to hire a Big Four auditor to actually carry out a general audit. French energy giant Total Energies SE said in a statement earlier this month while describing its investments in India. This will actually help address some of the red flags raised by Hindenburg. The Indian conglomerate Adani Enterprises has actually hired the public relations firm Kext CNC as its global communications advisor. Bloomberg News reported Saturday, citing people familiar with the matter. Kext, according to its website, has been involved in high-profile litigation matters, working against some of the most aggressive counterparties. So the attempts to actually calm the investor nerves have helped rally shares early last week, but the headwinds remain strong. The stock sell-off resumed after the MSCI Inc. slashed the amount of shares it considers freely tradable for 4 of the companies, a move that will basically result in lower weightings in its indexes. Moody's Investors Service on Friday cut its outlook for Adani Green Energy Limited and 3 other group companies, citing the rout in the shares. More shares in 3 Adani Group companies were actually pledged, SBI Caps trustee said in a notice to the Indian exchanges late Friday, for the benefit of the lenders of Adani Enterprises. Now, my dear friends, after this great in-depth analysis about the current scenario existing in Adani Enterprises, wherein we have basically discussed that the group will now shoot for the revenue growth of 15% to 20% for at least the next financial year, down from 40% growth originally targeted. We are now going to move forward in our discussion, wherein we are basically going to analyze the main aspects of the meeting of G20 Agri Deputies, which is actually scheduled to take place from 13th February to 15th February. And tomorrow, that is 14th February, is going to be the second day of this particular meeting. So my dear friends, the first meeting of agriculture deputies under India's G20 presidency is scheduled to be held from February 13 to 15 in Indore, Madhya Pradesh, and it has been successfully commenced yesterday, that is 13th Feb. The 3-day event is actually expected to be attended by around 100 delegates from G20 member countries, guest countries, and international organizations, the Agriculture Ministry said in a statement. So, Madhya Pradesh Chief Minister Mr. Shivraj Singh Chauhan will actually inaugurate the event. Millets and its value-based food products, along with the stalls from animal husbandry and fisheries, will be the major attraction, it said. So during the first Agriculture Deputies meeting of the Agriculture Working Group, that is AWG, under India's G20 presidency, the events will be organized to actually deliberate on agriculture-related matters on the very first day. And it has been successfully executed on 13th Feb. Now, on the second day, that is tomorrow, 14th February, the Union Civil Aviation Minister, Mr. Jyotiraditya Scindia, will be present, and there will be a general discussion among the participating members and international organizations. The third day, that is 15th February, will basically be dedicated to the deliberations of the key deliverables of the AWG, that is the Agriculture Working Group. It will be a technical session with the discussions and the participation from all members concerned and international organizations, the statement said. So during the event, the delegates will basically get to experience the rich Indian history through the heritage walks to the Rajwada Palace and excursion to the Mandu Fort. Gala dinners and cultural performances will actually provide a taste of Indian cuisine and culture, it added. Now, my dear friends, let's try to understand the main aspects wherein the OPEC chief urges the climate activists to see the bigger picture. The oil and petroleum exporting countries, that is OPEC's top official, urged the countries to invest much more in oil in order to meet the world's future energy needs, and said the climate policies actually need to be more balanced and fair. It is actually imperative that all the parties involved in the ongoing climate negotiations basically pause for a moment, look at the big picture. Mr. Hatem El Ghais, Secretary General of the Organization of Petroleum Exporting Countries, said Sunday at an energy conference in Cairo, they must actually work towards an energy transition that is orderly, inclusive, and hence help ensure energy security for all. So, his comments actually came amid a shift among some Western governments and companies regarding the fossil fuels. The prices for oil, natural gas, and coal surged after the Russia's invasion of Ukraine last February, that is in the year 2022, the date being 24th February 2022, therefore pushing the energy security to the top of the agenda for many lenders. The US President Mr. Joe Biden went off script during his State of the Union speech last week and said, "We are actually going to need oil for at least another decade." In Europe, Shell plc signaled it will actually stop accelerating spending on the renewable energy, while BP plc slowed its planned reduction of oil and gas output. OPEC's Al Ghais said the oil industry had been plagued by several years of chronic underinvestment, so now it needs $500 billion of investment annually until the year 2045, he said. The United Arab Emirates hosting of the COP28 climate summit in late 2023 will basically serve as the fresh opportunity to explore inclusive, sustainable, and consensus-based solutions to the climate change, said the Secretary General, who's from OPEC member Kuwait. The United Arab Emirates, also part of OPEC, has actually appointed Mr. Sultan Al Jaber, head of the national oil and gas firm ADNOC, as president for the summit. So while that's caused some controversy, Mr. Al Jaber has said that hydrocarbon producers must be at the forefront of the climate talks if the world is actually to transition to the cleaner energy, while also ensuring that the fuel prices remain affordable. Mr. Al Ghais reiterated that OPEC and its partners, known as OPEC Plus, the 23-nation alliance is actually led by Saudi Arabia and Russia, are basically committed to keeping the oil market stable. Saudi Arabia and other core OPEC members are unlikely to respond to Russia's announcement on Friday of a production cut by the pumping of more in intensity, as per the report of the Bloomberg. So, while Moscow indicated late last year that it may reduce the output as a retaliation against the Western sanctions, the crude prices still jumped on Friday. Brent extended its weekly gain to 8.1%, hence closing at $86.9 a barrel. Now, my dear friends, after this insightful discussion, we are going to move forward in order to discuss the aspects regarding green energy, electronics, industrial parks, which are basically getting the highest investment proposals. My dear friends, renewable energy, electronics, manufacturing, and industrial parks have attracted the highest investment proposals in terms of the value of the investments in the UP Global Investors Summit that actually concluded on Sunday, that is 12 February 2023. The event garnered a total of 33.5 lakh crore rupees through 19,058 memorandums of understanding, holding the potential of generating more than 93 lakh jobs, CM Mr. Yogi Adityanath said, promising a safe investor destination to the investors. The renewables actually fetched 4.47 lakh crore rupees worth of investment, making for 15.4% of the total investment proposals received, followed by electronics manufacturing at 3.58 lakh crore rupees and industrial parks at about 3.28 lakh crore rupees. Further, manufacturing as a whole attracted the highest number of proposals at 7,711, therefore promising to bring nearly 1.97 lakh crore rupees worth of investments. So region-wise, West Uttar Pradesh actually continued to be the major puller of investment with 45% of the total investment coming into the region, followed by Eastern Uttar Pradesh at 29%, and Central Uttar Pradesh and Bundelkhand at 13% each. District-wise, Noida attracted the highest percentage of investment at 27%, followed by Agra at 7.5% and Lucknow at 6.79%. Now, after this great in-depth analysis wherein we have learned that the renewable energy, electronics manufacturing and industrial parks have attracted the highest investment proposals in terms of the value of the investments in the UP Global Investors Summit, we are now going to consider another major aspect wherein we will learn that the Indian refiners may now buy the Russian fuel and hence export own. Actually, some Indian refiners are planning to import Russian diesel and other refined products for the domestic consumption so they can free up the locally produced fuels for export to the West, which has nearly stopped taking the refined products from Russia, according to the people familiar with the matter. The European Union has actually banned the import of refined petroleum products from Russia, including petrol, diesel and jet fuel from 5th February. The European Union, along with the G7 countries, has also placed price caps on Russian refined products. Russia has already become the top supplier of crude to India, accounting for nearly 28% of India's crude imports, up from less than 1% in the year 2021. India's imports of Russian refined products have also risen to record the levels in recent months, though mostly limited to fuel oil. They may soon expand to petrol and diesel. So, our people are actually exploring if we can source cheaper products from Russia, said a top executive at an Indian refiner. So, if India can import so much crude, it can of course import other products as well. But imports of products must make the commercial sense. We are in the business to make money. The executive further added that the basic decision would be based on the discount as well as the cost of insurance and freight. The actual prices being quoted in the market are actually sometimes very different from the published information on prices and cracks. So we will have to take a call based on what is being offered in the market, he said. The imports of Russian refined products could actually help meet the rising domestic demand while allowing the Indian refiners to actually export some of their own output mainly to Europe, which has actually blocked the imports from its biggest supplier, Russia. The Russian imports could also help build a domestic inventory of petrol and diesel, which could be drawn down during the plant maintenance shutdowns of the domestic refineries later this year. There is actually a big possibility that India could actually look to import the discounted Russian diesel barrels, but Africa, the Middle East, and to a certain extent South America could also be the potential markets vying for these discounted barrels as well, said Ms. Serena Huang, analyst at the energy cargo tracker Vortexa. India has actually been a net exporter of the refined products for years and has actually shifted its export away from Southeast Asia since the middle of last year, that is 2022, towards the Western markets, where the realizations were actually better. The Russian oil makes up nearly a quarter of crude processed in India now. This has actually triggered criticism in the Western press that Indian refiners were actually defeating the purpose of sanctions by supplying the products processed from Russian crude to the United States of America and Europe. the basic criticism will likely get harsher if Indian refiners choose to bring Russian products for domestic consumption and increase the export of domestic output to the West. So now, my dear friends, after this great insightful discussion, wherein we have learned that some Indian refiners are actually planning to import the Russian diesel and other refined products for domestic consumption so they can free up the locally produced fuels for export to the West, which has nearly stopped taking refined products from Russia. We are now going to move forward in our discussion, wherein we will basically try to develop a broad understanding of the fact that 6 of the top 10 firms actually lose 49,231 crore rupees in the market cap. So, my dear friends, the combined valuation of 6 of the 10 most valued firms eroded by 49,231 crore rupees last week, with FMCG major Hindustan Unilever taking the biggest ever hit. Last week, the Sensex declined 159.18 points or 0.26%. So, while Bharti Airtel, ITC, ICICI Bank and HDFC Twins were the other laggards from the top 10 pack, TCS, SBI, Reliance Industries and Infosys posted the gains. However, the combined market valuation gain of the 4 firms at 35,840 crore rupees was much less than the total loss suffered by the 6 companies, that is nearly 49,231 crore rupees. The market valuation of Hindustan Unilever Limited, that is HUL, plummeted by 15,918 crore rupees to reach 6,05,759 crore rupees. The market capitalization of Bharti Airtel tanked by 12,540 crore rupees to 4,29,474 crore rupees, and that of ITC plunged by 11,420 crore rupees to 4,60,932 crore rupees. ICICI Bank lost about 6,863 crore rupees to actually stand at 5,95,885 crore rupees. The market capitalization of HDFC Bank dipped by 1,255 crore rupees to 9,23,933 crore rupees, and that of HDFC fell 1,233 crore rupees to actually stand at 4,91,080 crore rupees. So from the gainers pack, TCS actually added 19,612 crore rupees, taking its valuation to actually 12,93,639 crore rupees. So after this very well strategized in-depth analysis, wherein we have basically learned that the combined valuation of the 6 of the 10 most valued firms eroded by nearly 49,231 crore rupees last week, with FMCG major HUL taking the biggest hit. Last week, the Sensex declined 159.18 points or 0.26%. We are going to move forward in our discussion, wherein we are basically going to understand the fact that Uttar Pradesh draws 33.5 lakh crore rupees proposal at Investment Summit. So, my dear friends, the commitment worth lakhs of crores to invest in Uttar Pradesh has been made possible due to the honest government and safe environment in the state. The the Union Minister for Commerce and Industry, Consumer Affairs, Food and Public Distribution and Textiles, Mr. Piyush Goyal, said on the last day of the UP Global Investors Summit on Sunday, that is 12 February 2023. The 3-day mega event held by the UP government concluded on Sunday with the CM, Mr. Yogi Adityanath announcing the summit has been able to fetch the proposals worth 33.5 lakh crore rupees across the sectors and in all the 35 districts. Furthermore, he said the ministerial groups and the senior administrative officials will now work together to actually get the proposals translated on ground to actually generate more than 93 lakh jobs. Talking about the 2017 assembly elections in the state, when the BJP was actually vying to come to power in the state, Mr. Goyal said, at the time, we were given the task of making a manifesto for the party. We met people across the state and people from all sections of life wanted change and able administration. We basically wondered where we will get the required funds to do what was to be promised in the manifesto. And Prime Minister Shri Narendra Modi ji was actually very clear that whatever we promised in the manifesto will have to be implemented in order to fill hope in the people, he said. He said that Mr. Amit Shah basically quoted 3 things, that is land mafia, sand mafia and liquor mafia will basically have to be ended in order to ensure there is no shortage of resources. And the way Uttar Pradesh has actually progressed in recent years basically shows that an honest government, a government working for the welfare of the people, a government that does not tolerate any wrongdoing can actually ensure necessary revenues and therefore take the state to new levels of achievement, he said. Mr. Goyal also hailed Uttar Pradesh plans to actually develop its wine industry capitalizing on its fruit production. He further stated the free trade agreements can actually help with development of the breweries and wineries in the state as they will get the market access, investment and technologies. He also lauded increase in UP's excise revenue from 14,500 crore rupees to 42,500 crore rupees in the past 6 years, even when the excise rates were reduced. So now, my dear friends, after this great in-depth analysis wherein we have been basically able to understand that the commitment worth lakhs of crores of rupees to invest in Uttar Pradesh has been made possible due to the honest government and safe environment in the state, the Union Minister for Commerce and Industry, Consumer Affairs, Food and Public Distribution and Textiles, Mr. Piyush Goyal, is actually proud of this great aspect as he quoted the same on the last day of the UP Global Investors Summit on 12 February 2023. We are now going to move forward towards discussing the impact of the Turkey earthquake, that it will actually lead to short-term hit on exports, hence hampering the international trade economics of the Indian economy. My dear friends, the Indian economy's merchandise exports of commodities such as cotton, man-made yarn and textile dyes may be impacted in a short run to the earthquake hit Turkey, according to the exporters. Two powerful earthquakes hours apart on Monday last week caused widespread destruction of property and killed more than 28,000 people, leaving millions homeless in Turkey. The earthquakes also caused damage to the infrastructure and logistics network, with the port of Iskenderun remaining closed for around a week. Exports to Turkey increased to $6.2 billion during April to November 2022 against $5.1 billion the corresponding period in 2021. The Federation of Indian Export Organization, that is FIEO Director General Mr. Ajay Sahai, said that the extent of the damage in Turkey is actually yet not known, and thus its impact on exports is actually very difficult to ascertain as of now. However, the earthquake will further depreciate Turkish lira, which has significantly depreciated recently and has touched its record low following the earthquake, making the imports costlier and therefore impacting the demand, he said. Furthermore, since the textile manufacturing centers of Gaziantep and Kahramanmaraş provinces are worst affected, our export of cotton and man-made yarn and textile dyes may be impacted in the short run, Mr. Sahai said. And Gaziantep is actually a province in the south-central Turkey, and it's a major manufacturing hub of that country. Sharing similar views, Hand Tools Association President Mr. S.C. Ralhan said that India's exports to Turkey are actually increasing. Furthermore, the trade may get impacted in the short term only due to the earthquake there, but not in the long run. There was actually no news so far from the MSME segment exporters of any issue while exporting to Turkey so far, Mr. Ralhan said. In the year 2021-22, India's exports to Turkey stood at about $9 billion, while the imports aggregated at nearly $2 billion in the same fiscal. Furthermore, the major Indian exports to Turkey actually include the mineral oils and fuels, man-made filaments and staple fibers, automotive spare parts and accessories, organic chemicals. Turkey's exports to India actually include broken or unbroken poppy seeds, machinery and mechanical appliances, iron and steel articles thereof, inorganic chemicals, pearls and precious or semi-precious stones and metals, including the imitation jewelry and marble. The Indian community in Turkey is actually quite small, mostly working in business establishments and universities in Istanbul and Ankara. A small number of professionals also work on certain projects there. The State Bank of India, that is SBI, has a representative office in Istanbul. Turkish Airlines, in a code-sharing arrangement with Air India, actually operates daily flights from Istanbul to Mumbai and Delhi. So my dear friends, after this great insightful discussion wherein we have learned that following the earthquake in Turkey, that may actually lead to the short-term hit on exports by the Indian economy to Turkey. That is, Indian merchandise exports of the commodities such as cotton, man-made yarn and textile dyes may be impacted in the short run to the earthquake Turkey. As per the report by the exporters, let's move forward in order to understand that Oil India reports highest ever quarterly profit of 1,746 crore rupees. My dear friends, the state-owned Oil India Limited reported its highest ever quarterly net profit in the third quarter ended December 31 on the back of a rise in oil and natural gas prices. The net profit of nearly 1,746.10 crore rupees or 16.10 rupees per share in October to December compared with 1,244.9 crore rupees or 11.48 rupees a share in the same period a year back, the company said in a statement. The rise in profitability was actually helped by higher realization on crude oil and gas the firm produces and sells. Also, the output increased, helping both top line and bottom line. And Oil India Limited actually earned $88.33 for every barrel of crude oil it produced and sold in the third quarter of the current fiscal, up from $78.59 a barrel realization in the year-ago period. Crude oil is actually refined at the refineries to produce the fuels such as petrol and diesel. The prices of natural gas, which is used as the fuel to produce electricity, make fertilizers, and converted into the compressed natural gas, that is CNG, for use in the automobiles, rose to $8.57 per million British thermal unit from $6.10. The firm actually produced 0.81 million tons of crude oil in October to December, up from 0.75 million tons a year back. Gas output also increased from 0.79 billion cubic meters to nearly 0.8 billion cubic meters. It sold 1.41 million tons of oil and oil equivalent gas in a quarter as opposed to the sales of 1.35 million tons a year back. The highest ever profit was on strength of better pricing and higher output of crude oil and natural gas, the company said. Furthermore, for the 9 months ended December 31, 2022, the profit after tax, that is the PAT, recorded growth of over 120% to nearly 5,022.12 crore rupees from 2,257.30 crore rupees in the year-ago period. And the turnover increased by 27% during the quarter 3 of the financial year 2023 to 5,981.63 crore rupees. The Board of Oil has actually declared a second interim dividend of 10 rupees per share, that is with a face value of 10 rupees. This is in addition to the first interim dividend of 4.5 rupees per share declared earlier. The total interim dividend paid during the year is actually 14.5 rupees per share. Now, my dear friends, after this great insightful analysis wherein we have learned in a detailed manner that the state-owned Oil India Limited actually reported its highest ever quarterly net profit in the third quarter ended December 31 on the back of a rise in oil and natural gas prices, hence resulting to the highest ever quarterly profit of 1,746 crore rupees. We are now going to move forward wherein we are going to develop a very conceptual understanding wherein the Japanese economy actually urges Indian economy to join the Indo-Pacific Economic Framework's trade pillar. My dear friends, Japan is actually encouraging India to join the Indo-Pacific Economic Framework, that is IPEF trade pillar, that also includes the digital economy. Prime Minister Shri Narendra Modi ji has been a strong votary of the digital economy. Japanese negotiator in the Indo-Pacific Economic Framework, Yamashita Takandri, who was in India last week to actually participate in the second round of the Indo-Pacific Economic Framework negotiations, told Economic Times that our respected Prime Minister Shri Narendra Modi ji has announced to launch Digital Public Infrastructure Task Force at G20 and Indo-Pacific Economic Framework Trade Pillar has digital economy as one of its key pillars, and therefore India should actually consider joining the Indo-Pacific Economic Framework Trade Pillar. Yamashita informed that the intensive negotiations were actually held here, reflecting the diversity and ever-growing diversity of the countries in the Indo-Pacific Economic Framework, including the Global South. Also, Japan and India will actually bridge the Global South, G7 countries and IPEF, that is the Indo-Pacific Economic Framework countries. Japan is actually the host for the G7 summit this year. My dear friends, India is actually very active to diversify the sources for procuring the APIs and solar panels. So broadening the ties with the LMCs in the Indo-Pacific Economic Framework, that is IPEF, will actually broaden the alternative choices for the procurement both in peacetime and when a supply chain disruption happens, Ms. Yamashita pointed out. India actually hosted the second round of negotiations of Indo-Pacific Economic Framework last week. There were negotiations on 3 of the 4 pillars under IPEF, that is supply chain, clean economy, and fair economy. I repeat, supply chain, clean economy, and fair economy, which are actually 3 main pillars under the Indo-Pacific Economic Framework being considered in these negotiations. India has actually decided to stay out of the trade pillar for now, as a broad consensus has actually not emerged on the issues pertaining to labor, environment, digital trade, and public procurement. The first negotiating round basically took place in Australia's Brisbane in December, which basically focused on the trade pillar. So my dear friends, after developing the broad insights of the aspect where Japan urges India to join the Indo-Pacific Economic Framework's trade pillar, we have learned that the benchmark indices continued to trade in the red on Thursday in a volatile session. Nifty at the close settled below 18,000. Sector-wise, FMCG pack registered the maximum gains of over 1%, while the financial services logged the maximum cuts of over 1%. Erasing early gains, Nifty and Bank Nifty basically ended lower for the second consecutive session. Bank Nifty slipped below 42,500, while Nifty settled near 18,000 mark. Nifty to oscillate between 17,800 and 18,200 band, while the focus is actually shifting to the selected mid-cap stocks. FMCG and infrastructure stocks regained momentum on the upside, and hence the stocks specific rally is actually expected. As per Mr. Amit Trivedi, CMT Technical Analyst, Institutional Equities, Yes Securities, who basically said, here are 6 stock recommendations as for Friday. Now we are coming to a very interesting topic for today, wherein we will learn that more FAME 2 funds may go to e-buses. My dear friends, the government is actually considering tweaking the allocation of funds under its electric vehicle subsidy scheme to actually focus more on replacing the diesel buses in the public transport, amid the allegations that many electric two-wheeler makers had wrongfully claimed the incentives. It is actually looking at the option of increasing the utilization of resources earmarked under the FAME 2, that is faster adoption and manufacturing of electric vehicles scheme, for electrifying the buses the government sources told Economic Times. There is actually a basic keenness that we bring down on road more electric buses, as this is an area of highest impact socially and environmentally, said a senior official. So it will not only help reduce the vehicular pollution but also cut drastically our fuel bills, as per the official who basically said this thing on the condition of anonymity. Furthermore, the move actually comes even as the investigations are actually underway against a dozen electric two-wheeler makers for alleged violations of the local value addition criteria under the scheme. Ather, Ola, TVS Motor and Vida are separately under the scanner for alleged mispricing of their electric vehicles to actually become eligible for subsidy under the scheme. So the objective for faster adoption and manufacturing of electric vehicles is actually to incentivize the shared mobility operators to transition to electric. And that is why, my dear friends, we did not extend the subsidies to the private car buyers under this scheme. The basic aim is to implement the scheme in such a manner that the ordinary people benefit the most. My dear friends, this is actually a very, very important aspect. And the government had earmarked 10,000 crore rupees under the second phase of the FAME India initiative to actually incentivize the purchase of 7,000 buses, 55,000 passenger cars, 500,000 three-wheelers and 1 million two-wheelers with electric powertrains. The second official said the government has actually achieved nearly 80% of the target for overall electrification in the two-wheeler segment, and proposals are now being studied to actually utilize the remaining allocation to the segment to actually promote electrification of the buses. The government had nearly doubled the allocation for FAME 2 in the budget for the next fiscal year to nearly 5,172 crore rupees. And under the FAME 2 launched in 2019, it has so far spent nearly 3,889.94 crore rupees. Under the FAME 2, allocations were actually made as per the committee which can alter these caps. We have already sold 7,70,000 electric two-wheelers against a target of 1 million under FAME 2. While we will not carry out the wholesale changes, some tweaks can be done. We are looking into it. So the program implementation is actually really great. The center is seeking to replace up to 30,000 diesel-run buses with the electric powertrain vehicles in the next 2 to 3 years, hence marking India's giant leap forward towards the clean mobility. In January, the government-run Convergence Energy Services Limited actually floated a tender to basically procure 4,675 electric buses under the National Electric Bus Program. And the tender is valued at about 5,000 crore rupees and is in addition to the two tenders for 5,450 and 6,465 e-buses concluded last year. The subsidy allocated to support electrification of the buses was exhausted in the first tender itself. So my dear friends, meanwhile, the government has stalled the subsidy dispersal of more than 1,100 crore rupees under the flagship scheme to a dozen two-wheelers manufacturers at the start of the ongoing financial year. So it actually stopped releasing the payments in April 2022. The government provides basically provides an incentive of 15,000 rupees per kilowatt hour on electric two-wheelers. capped at 40% of the total vehicle cost, provided they meet the specified localization criteria. And the incentive is actually accounted for in the retail price of the vehicles, and the government reimburses the manufacturers within 45 to 90 days on the submission of the proof of sale. The anonymous emails sent to the government departments and the media organizations earlier this fiscal year alleged that some electric two-wheeler makers were actually not adhering to these localization guidelines and using imported components mostly from China, despite their assertions to the contrary when claiming the subsidies. The EV Industry Association has actually claimed that the vested interest groups were basically trying to scuttle the government's e-mobility policy through an anonymous campaign. So now let's try to understand the key takeaways. That is, we are going to revise the basic allocations done under the scheme of FAME 2. So, as for the year 2019-2020, the budget allocation has been 500 crore rupees, and the fund utilization as on 30th November 2022 has been the same, that is 500 crore rupees. Similarly, for the year 2020-21, 318 crore rupees has been the budget allocation, and the same has been the fund utilization as on 30th November 2022. Then for the year 2021-22, 800 crore rupees has been the budget allocation, and 800 crore rupees, that is the same amount, has been the fund utilization. Whereas for the year 2022-2023, 2,903 crore rupees has been the budget allocation, but the fund utilization as on 30th November 2022 has been 1,128 crore rupees, that is nearly the 50% of the budgeted amount. So after this great in-depth analytical discussion wherein we have basically learned that the government is actually considering tweaking the allocation of the funds under its electric vehicle subsidy scheme to focus more on replacing the diesel buses in public transport amid the allegations that many electric two-wheeler makers had wrongfully claimed the incentives, and more FAME 2 funds may actually go to the e-buses. We are now going to move forward to analyze the very important aspect related to international economics. That is, the US-China goods trade actually hits record even as the political split widens. My dear friends, the trade in goods between the United States of America and China climbed to a record in 2022, a reminder that the consumers and companies in the world's two biggest economies actually remain deeply connected while their governments diverge on a range of economic and political issues. The total merchandise trade between the two countries rose to $690.6 billion last year, hence exceeding the record set in 2018, the Commerce Department data showed on Tuesday. The data are actually not adjusted for inflation. Washington is actually pressing ahead with the plans to basically curb China's access to sensitive semiconductor technology, and is therefore trying to get the countries it considers allies to do the same. The annual goods trade deficit with China widened 8% to nearly $382.9 billion, the biggest on record after the $419.4 billion shortfall in 2018. The shortfall in trade in goods and services with all the countries climbed 12.2% to almost $1 trillion. So the deepening trade ties between the countries risk being challenged by the widening split between Washington and Beijing, which have actually clashed on the issue, including human rights, trade, and competition for technology and markets. The data also come at a particularly low point between the two amid the shooting down this week of an alleged Chinese spy balloon over the US territory. My dear friends, Washington is actually pressing ahead with the plans to curb China's access to sensitive semiconductor technology and is trying to get the countries it considers allies to do the same. It's also working to lessen the USA reliance on China for the merchandise, encouraging Western companies to invest in what the Treasury Secretary, Mr. Janet Yellen, has termed trusted trading partners such as India in a process known as friendshoring. The value of merchandise exports to China actually climbed to an all-time high of $153.8 billion, while imports increased to $536.8 billion, just under the record set in 2018. So it actually shows that the consumers have minds of their own, said Mr. William Reince, who actually served as a top commerce official in Clinton administration and is now a senior advisor at the Center for Strategic and International Studies, a Washington-based think tank. So as per the market level standards, we are still doing a lot of business despite the efforts of both governments. The macro relationship hasn't changed that much. We are still trading a lot. Now let's see the overall picture of the tariff strategy. The Biden administration has actually kept in place a set of tariffs imposed under the President Mr. Donald Trump and confronted Beijing over what it sees as human rights abuses, unfair trade practices, and threats to the US national security. But hundreds of US businesses, big and small, have actually made a fresh push for the removal of the levies, which were actually instituted in waves starting in 2018, saying they have raised their input costs at a time of accelerating inflation. And as the White House reviews the tariffs, there is the little indication that the White House is actually inclined to significantly roll back the tariffs on the imports that actually span industrial inputs, such as the microchips and chemicals, to the consumer merchandise, keeping them in place as leverage against China and amid the concerns that repealing them would be politically risky. So what is the basic concept of chips flashpoint? The chip industry basically continues to be a major flashpoint for the trade tensions. Though China is the biggest maker of phones and computers, the United States companies will still control most of the underlying chip technology, and it tightened the restrictions on exports of semiconductors last year. Beijing in December filed a dispute with the World Trade Organization trying to overturn the US imposed export controls, which aim to limit the Asian nation's ability to develop a domestic semiconductor industry and equip its military. The officials on both sides, that is USA and China, are actually looking at ways to better manage the differences between the two powers, with Yellen and Vice Premier Liu he holding in-person meetings in Zurich in January. That followed face-to-face discussions held by the Presidents Joe Biden and Xi Jinping held in Bali, Indonesia in November 2022. But the efforts to actually the relations took a knock after the Pentagon detected a suspected Chinese surveillance balloon lingering at high altitude over the sensitive nuclear sites in Montana, which led to the postponement of a visit by the Secretary of State Antony Blinken. Now let's see the overall picture in order to develop a better understanding of the trading partners USA and China. China has actually maintained its third place among the top US trading partners for goods in the year 2022, accounting for 13% of the total trade. Canada kept the top spot with a 14.9% share valued at $793.8 billion, while Mexico was second at 14.7% or $779.3 billion. The only change in the top 10 rankings relative to 2021 was Vietnam, which rose 2 spots to 8th position with a total trade of $138.9 billion. So my dear friends, after this great in-depth analysis wherein we have basically learned that the deepening trade ties between the countries USA and China risk being challenged by the widening split between their respective regions, Washington and Beijing, which have clashed on the issue, including human rights, trade, and competition for technology and markets. So, my dear friends, in today's session, we have been able to actually develop a very broad and conceptualized conclusions regarding the overall economic developments taking place in our economy. That is, we have tried to understand the various developments or the various objectives with regard to the Aero India show being held in Bangalore. We have tried to understand its core objectives in great detail. Then we have also tried to understand that how Tata Group is actually set to record the highest growth in history, and its chairman, Mr. N. Chandrasekaran, has actually very beautifully demonstrated and presented the facts which explain this statement very well. Furthermore, we have tried to understand the current scenario of the Adani enterprises, the current scenario prevailing in Adani enterprises, wherein we have tried to understand that the bank's fate rests on the cash earnings of the companies. And the Adani Group debt is the issue of major concern, the biggest worry for the bankers among all the group companies, wherein Adani Transmission and Adani Green are the most over-leveraged at more than 8 times. Furthermore, we have also understood that Adani actually cuts the growth target capex in the post-Hindenburg's repair moves. Then, my dear friends, we have tried to understand the objectives of the G20 agreed deputies, the meeting which is being held from February 13 to February 15, and it has successfully started today in Indore, Madhya Pradesh. Then we have tried to understand that how OPEC chief urges the climate activists to see the big picture, wherein the OPEC top official urged the countries to actually invest much more in oil in order to meet the world's future energy needs, and basically the basic concern for the climate policies which actually need to be more balanced and fair. Then we also had the strategic discussion on green energy, electronics, industrial parks, which are to get the highest investment proposals in the Indian economy. Then we have also learned that Indian refiners may now buy the Russian fuel and export their own to the western parts of the world. Also, we have learned that 6 of the top 10 firms lose 49,231 crore rupees in the market cap. Then we have also understood that in the recent summit, that is the UP Global Investors Summit held in UP and concluded on 12th Feb 2023, UP basically draws 33.5 lakh crore rupees proposal at this particular summit. And the commitment worth lakhs of crores to invest in UP has been made possible due to the honest government and safe environment in the state. Union Minister for Commerce and Industry, Consumer Affairs, Food and Public Distribution and Textiles, Mr. Piyush Goyal, said in his statement. And my dear friends, this is the basic backbone for the success of any economy. That is honest government and safe environment, which actually all investors are actually longing for. Furthermore, we have also learned that as the after effect of the earthquake which struck in Turkey can have considerable impact for short term on the exports by the Indian economy. Then we have also realized that Oil India Limited reports highest ever quarterly profit of 1,746 crore rupees. Furthermore, we have also tried to understand that how and why Japan is urging India to actually join Indo-Pacific Economic Framework's trade pillar. Japan is actually encouraging India to join the Indo-Pacific Economic Framework trade pillar that also includes the digital economy. And PM Shri Narendra Modi ji has been a strong votary of the digital economy. Then we have tried to understand that the FAME2 funds, that is the faster adoption and manufacturing of electric vehicles funds, may actually go to e-buses in the Indian economy, as the government is considering tweaking the allocation of funds under its electric vehicle subsidy scheme to actually focus more on replacing diesel buses in public transport amid the allegations that many electric two-wheeler makers had wrongfully claimed the incentives. Then finally, we have understood that though the political and economic relationships might not be as comfortable as required between the United States of America and China, but still the goods trade between these two economies actually hits record. That is the deepening trade ties between the two countries risk being challenged. The widening split between Washington and Beijing, which have actually clashed on the issue of including human rights, trade, and competition for technology and markets. So, my dear friends, I really hope you would have found this session really very, very useful, helping all of you to actually deepen your understanding regarding the major developments which are of strategic significance for the overall growth of the Indian economy. Moreover, we have also tried to understand the core aspects of the trade between United States of America and China, even though they may be having the bitter relationships politically and economically. So this session has been very, very illustrative, and I have tried my best to present the facts in a very easy and understandable language, and these are the very significant developments, my dear friends, and you should actually have a very firm understanding of these major developments. So on this note, I would like to end today's session, and I hope you all must have enjoyed this thoroughly, and I really wish you all please take very good care of yourselves until we meet next. So thank you so much. Namaskar. Jai Hind.